Now we're going to talk about Capitec, which is a full retail bank with over it's actually more than that. It has more than 8 million
customers.
It's almost 9 million retail customers.
You know, it added like 1.3 million customers in the last year, which is
That's why I'm always cautious over the number of customers because it moves so quickly. Market cap, 98.1 billion rand, a price to earnings ratio, 25.9, and a dividend yield here of 1.5%.
Let's put up the share price, because that is about the most attractive share price on our market, and 100 billions worth of value created over the period of 15 years since it listed.
Sure, I'm actually astounded. That's why I've gone quiet. Nesan, I hope you managed to capitalize on this stock for your clients.
We've been invested through PSG, which is the holding company for Capitec, but you know, half of PSG's value is Capitec. Has this not been just one of the most phenomenal South African stories that we've seen? You know, a really orthodox business focused on primarily unsecured lending, but branching out now into transactional banking, credit cards. You know, it's interesting, there's 8 million clients, a lot of them actually earn less than 15,000 Rand a month. So, you know, they haven't even penetrated the upper sort of middle class South African consumer yet. And you're going to have to bank that they do that. And, you know, at the sort of 900 or 850 Rand a share right now, I mean, it could easily double in the next 5 years if they're successful at that.
Well, yeah, there's an endorsement for the bottom drawer.
Unbelievably, they also have nearly 50 billion rands worth of retail deposits, which, as you know, is the best source of funding, because it comes in and people have fairly low expectations of what they're going to earn on that. So it's been incredible.
And just picking up on what Nesan said, there's a huge opportunity to grow into the next LSM.
I think so, because of course, as he alludes, they started off with a loans-based business, but in recent times they've started extending larger loans to better clients and fewer loans to dodgy clients. And of course what they do is give small amounts to people to test them out first, and then they start expanding that. So their bad debt ratios are around 6% of loans advanced. The loans advanced book is now also growing, but more and more of the money is coming from transactional revenues, and that's a good strength of theirs because they got new banking technology. They took an off-the-shelf system in the beginning of this centenary, millennial, what are we? This is like at the beginning of this
century.
Beginning
of the century.
Now, I mean, for most companies that we talked about today, their core banking system comes from the 1970s. This is a big plus.
We've also seen a very smooth transition, management transition, the days of Rian Stassen to the new CEO without any impact on the share price.
Yeah, I think that just goes to show the level of succession planning that had taken place. And it's nice having a big shareholder like PSG, because they would insist that actually exists in the business. Let's not forget also that they bought into a company called Cream Finance offshore, which is a technological sort of banking platform. And that just speaks to Capitec's awareness of the impact that fintech could have on their business and starting to prepare for it right now.
Hot, not hot?
Hot for me, still.
Hot. Still, yeah. Well, exactly. If you think it's going to double, well, you said potentially it could double in 5 to 6 years.
Apparently it's the most expensive bank in the world by ordinary sort of measurements of ratio. There's very few that trade on a 26 price to earnings ratio and a low dividend yield, but I think it just carries on doing well. They're investing for the future, and I think it's going to gain market share.
So you are also hot?
Hot on this one. I think